Bitcoin just bled through a record ninth straight day of ETF outflows, $2.8 billion gone, while U.S. stocks chase fresh record highs and savers watch mortgage rates tick up as inflation flares again. Three camps, three battered scorecards, and tonight, the lowest score on the board still walks away the winner. You read that right? Welcome to today's Capital Clash, where your money fights for its life every single day. I'm running the numbers so you don't have to. It's May 29th, 46. Let's go. Set the scene, because today was weird. We had a market backdrop where U.S. equities were chasing records, crypto was diverging hard to the downside, and inflation came back into the headlines just enough to push mortgage rates higher on the week. That's the macro frame. A risk-on tape for stocks, a risk-off tape for Bitcoin, and a savings environment where the dollar in your account is once again losing a foot race the way to the consumer price index. Bank of America strategists were out today telling clients the AI rally is not your dot-com boom. They're shopping for a different historical parallel entirely. Meanwhile, a strategist on the tape was using prediction market shifts to model what happens to oil, equities, and the dollar the moment an Iran deal gets announced. That is the world we're trading in. Geopolitics priced in real time through Kalshi contracts, AI earnings beats fueling the indices, and crypto, the so-called risk-on darling, completely decoupling from the risk-on trade. None of the three camps put up a monster score today. This was a grinded-out defense wins championships kind of session. The winner won by inches. Let's get into the rounds. Round one, crypto steps into the ring. And folks, the headlines are brutal. CoinDesk leading with this line: Bitcoin underperforms risk assets as a record. Ninth day of ETF outflow signals waning demand. 9 straight days, $2.8 billion pulled from spot Bitcoin ETFs. That is not a wobble. That is institutional capital walking out the door in single file. The price action confirms it. Bitcoin slid to April lows as crypto diverged from record-chasing U.S. equities. Think about that divergence. When stocks rip and Bitcoin sells off, the entire risk-on narrative for crypto breaks down. That's the bear case being written in real time. Altcoins didn't save the day either. We had a security story hit the tape. Solana, Sui, and Aptos wallet data targeted in what's being called the trapdoor package attack. That is the kind of headline that freezes retail flows in their tracks. On the corporate crypto treasury side, Strategy's STRC instrument slipped below $99 as a competitor. Strive started pulling investor attention away. The Michael Saylor playbook is suddenly facing competition. One bright spot: Kalshi followed the CFTC in suing Minnesota over a law criminalizing prediction markets, keeping the regulatory fight for on-chain adjacent markets alive and well. Reddit sentiment per our reading came in at 43 out of 100. Not panic, but glum. The mood is tired. Google Trends interest scored 31 out of 100. Search demand drying up just as the ETF outflows pile up. Buzz score, a flat 0. No viral moment, no catalyst, just slow bleeding. Add it all up and crypto's battle score is 26.5 out of 100. Verdict on the round: crypto looked terrible, but as you're about to see, terrible was enough. Round 2. Stocks enter the arena, and on the surface, this should be a layup. The S&P chasing records, Dell's stock heading for a record-smashing gain as the AI boom drives a massive earnings beat. That's the kind of headline that should print 80+ on our sentiment board. AI capex, hyperscaler demand, server orders, Dell delivered the goods. But dig under the hood and the story gets complicated. Bank of America strategists came out saying the AI rally is not the dot-com boom. They see a different historical parallel, and depending on how you read that note, it's either reassuring or a warning shot. Then we get the retail reality check. Gap and American Eagle stock both getting crushed, and neither retailer is blaming the economy, meaning the consumer might be fine, but specific brands are losing the fight. That's a stock picker's market, not a tide lifts all boats market. We also had the Iran deal, prediction market strategist notes circulating, traders gaming out how an announcement reshuffles energy, defense, and the dollar in a single tape. And on the lifestyle desk, MarketWatch ran a CFP defending golf course networking and a quirky piece on Aaron Rodgers' estranged parents selling their Chico home for $1.7 million filler, but it tells you the sentiment desk had bandwidth for soft stories, which usually means the tape was orderly, not chaotic. Sentiment scored 55 out of 100, the highest of any camp today. That's the AI earnings glow, but Google Trends came in at just 13 out of 100. Retail isn't searching, they're not chasing. Buzz, again 0. No meme stock moment, no viral squeeze. Final tally: stock score 25.9 out of 100. Verdict on the round: a record-chasing index that couldn't convert headline strength into search demand. Style points, no knockout. out. Round 3, savings steps in, and let's be honest, savings rarely throws haymakers. Today was no exception. The headline story from Nerd Wallet: weekly mortgage rates tick up as inflation flares again. That is the entire savings narrative in one sentence. Inflation is back on the radar. Rates are drifting higher on the long end, which means borrowers feel the squeeze, but high-yield savers and CD holders get a few more basis points of breathing room. We also got real personal finance news with Byte. City Custom Cash Card closes to new applications. One of the most popular cashback cards in the country is shutting the door on new signups. That's a meaningful change to the rewards landscape. Hyatt's devaluation, per Nerd Wallet, isn't the disaster it looked like. Points and miles community processing a hit and finding the silver lining. Southwest credit cards boosted bonus offers up to 90,000 points. That's an aggressive grab for new customers heading into summer travel. And on the career and cash flow desk, Nerd Wallet asking the question on a lot of people's minds right now: should you take a buyout at work? That headline alone tells you the labor market is softening at the edges. Plus the Hotel Tonight booking guide, rounding out the consumer spending angle. Personal finance, Reddit, and the Saver community scored 49 out of 100 on sentiment. The second highest reading of the day: calm, methodical, not euphoric, not panicked. Google Trends, though, a brutal 7 out of 100. Nobody is searching for high-yield savings or CDs today. The topic is invisible buzz. 0 again. Savings battle score 21, 7 out of 100. Verdict on the round: the most stable mood on the board, but the lowest search interest in the building. Head-to-head breakdown. Let's put the scoreboard on the screen. Crypto 26.5, stocks 25.9, savings 21.7. This is a nail-biter. Crypto edges stocks by 0.6 of a point. 0.6. That is the closest top of the podium finish we've seen in weeks. So let's dig into the why. On the trend component, the search and interest signal, crypto crushed it relatively, scoring 31. Stocks came in at 13, savings at just 7. That trends number is what won this fight for crypto, even on a brutal news day. Even with ETFs hemorrhaging cash for 9 straight sessions, the public is still typing the word Bitcoin into Google. That curiosity, that lingering attention, it scored. On sentiment, the order flips completely. Stocks led at 55, savings second at 49, crypto last at 43. So if you judge today by mood alone, stocks win. The AI earnings beat from Dell, the orderly tape, the soft news bandwidth. The mood was good, but the mood didn't translate to the search bar. Retail wasn't there. And on buzz, viral, breakout, lightning in a bottle, social momentum, all 3 camps scored 0. Nobody had a moment today. Nobody trended. Nobody broke through. So we have a session where stocks led on vibes, savings led on stability, and crypto led on raw attention. Crypto's attention edge was just barely enough to overcome its sentiment deficit. That is the math behind the result. Was today a blowout? Absolutely not. Was it a nail-biter? It was a photo finish. The verdict: tonight's winner of today's capital clash, crypto, with a battle score of 6.5 out of 100. And the reason crypto won is not because crypto was good. Crypto was, by the headlines, the worst day of the 3. The reason crypto won is because even on its worst day, 9 straight days of ETF outflows, $2.8 billion in redemptions, prices breaking to April lows, a wallet targeting malware attack making the rounds, the public still showed up to look. That trend score of 31 was the margin. If you've got money in crypto right now, today's win is hollow. The price is at April lows and institutional flows are leaving, but the attention is still there, which means the next catalyst still has an audience to react to it. Tomorrow's watch list: 3 things you need on your radar. Number 1, does the Bitcoin ETF outflow streak hit 10 straight days? If it does, that becomes a self-reinforcing headline and dealers start hedging differently. If we get a single day of net inflows, the narrative flips overnight. Number 2, the AI trade. Dell delivered today. Watch for follow-through from the hyperscalers and any guidance updates that either confirm or crack the Bank of America thesis that this is not the dot-com boom. Any wobble in AI, CapEx spending, and the record-chasing index gets a reality check. Number 3, inflation and rates. NerdWallet flagged inflation flaring again and mortgage rates ticking up. Any incoming CPI prints, PCE data, or Fed speak this week will reset the rate path, which directly hits mortgage borrowers, savings yields, and equity multiples all at once. Bonus catalyst: keep an eye on prediction market chatter around an Iran deal. If that announcement lands, oil moves, the dollar moves, and equities reshuffle in minutes. Tomorrow could absolutely flip the leaderboard. Tune in. Before you go, everything on this show is for educational and informational purposes only. Nothing here is financial advice. Always do your own research before making any investment decision. Now, if you're in the winning camp today, even on a 26.5 victory, drop a comment below and tell me you're holding. If you're not, there's always tomorrow, and the Clash resets at the opening bell. Follow for the Daily Clash, and I'll see you next time. This is today's Capital Clash.